Good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Here's what's coming up on today's program. Russia threatens to cut gas supplies to Europe via Nord Stream 1. The EU is dropping up plans to limit its reliance on Russian energy. Red-hot nickel sees an unprecedented spike to hit a record high. The London Metal Exchange is forced to suspend trading. And later this hour, it's Bloomberg's Price of Power, where we look at the latest moves in energy prices. We speak exclusively to the chief executive of the French utility ENGIE, Catherine McGregor, and to the IEA Executive Director, Fatih Birol. You can send in your questions on IB Plus TV Go. You can also reach out on Twitter directly. Now, first thing is first, let's check in on the markets. And the story is a reversal when it comes to European Stock 600. Remember, it was only yesterday that a lot of these indices were at the lowest in 12 months. The focus is actually on this nice Bloomberg scoop talking about joint issuance, that big joint issuance from the EU countries to fund defense and energy. Now, this is just a proposal, but there is a belief in the markets that maybe they will come together, given the coming together of world nations to actually sanction Russia after the war in Ukraine. So European stocks gaining some 0.9%. It's a lot of course, the repricing that we saw when it comes to Brent oil, what that means for the ECB, the Fed, and the Bank of England. The bigger picture, longer term, is what does it mean for valuation. Now, the 10-year German bond, of course, extremely sensitive for any bond issuance, currently at 0.064. Natural gas, you can see, still gaining some 6.3%, what that means for stagflation and how central banks will react. And then nickel, 80,000. This is an incredible story. We're looking at it just an hour ago at 100,000. Then it's come back a little bit. This is on the margin call. Now, the LME decided actually to suspend trading full nickel for the moment. We understand that there's a Chinese bank that's embroiled in all of this because one of their clients needed to meet a margin call, and the LME said they will give them a bit more time to see whether they do. If they don't, this would be one of the biggest second-round effects that we've seen since the war started. And, of course, the end game and the third-round effect of that for the moment is pretty unclear. All right, you can see the FTSE here in the UK gaining some 0.5%. A lot of banks are supported this. They were the ones that were being slammed yesterday, and the DAX gaining some 1.4%. Now, Russia threatening to cut off its natural gas supplies to Europe via Nord Stream 1. The move, which would be retaliation for sanctions, could actually worsen energy market turmoil and drive consumer prices higher. Well, joining us now is Bloomberg's European correspondent, Maria Tadeo. Maria, so, I mean, Russia could actually cut its gas flow to Europe. What does it mean for energy dependency? And do we have enough stockpiles to make up for that lost Russian gas and oil?
Well, they could, and so far they haven't done this. You know, they've kept supply very tight, but nonetheless, Gazprom has pretty much honored every contract. But yesterday, Alexander Novak went on Russian state TV at night, and he said Russia has a right to counter sanctions, and that could mean, well, ditching that Nord Stream pipeline 1 and, of course, not supplying it through that. And then that would mean a catastrophic fallout for the world economy. He even said he put a price on this, Francine, saying we could see $300 a barrel for oil. Now, when it comes to the European Union, now this morning what they say is that this proves that sanctions are working. They bite, and they bite hard, and now Russia's making threats again. They say that it also shows in many ways that Russia is no longer a reliable partner for the European Union. Now, that is on paper, but in reality, we know that this could be a real concern for countries that do still take Russian energy because, well, they need it. And then yesterday, the Germans made it clear if we switch from one day to another, we're going to have problems in our industries, heating up our homes and having a normal life.
So, Maria, Bloomberg also reporting this morning that the EU is considering this massive joint bond issuance to fund energy and to fund defense. I mean, this would be huge and be a huge game changer. What's the likelihood of this happening?
Well, you know, Francine, in theory, what we hear is that this would work and operate in many ways that would look like the next generation EU. Remember, this was this pooled joint fund in which the Commission, which is AAA rated bonds, including the other institutions, well, they tap the market, they bring in the revenue, and then, of course, they assign it to each country based on GDP and other criteria. Now, what we hear is that this could work in many ways that are similar to that. It will be presented to European leaders when they meet in Paris on Thursday, Friday. What we hear is that this is a very early days project, but nonetheless, what they need now is a political approval and a political green light to it. If that happens on Friday, then the Commission can get to work on the technicalities. But I did have a source tell me jokingly, but nonetheless, it does give you an indication of what they feel, that Vladimir Putin is doing something that's never happened before, get a fiscal union to back up European defense spending.
All right, thank you so much. Maria Tadeo there in Brussels for us. Now, later this hour, it's a Bloomberg Price of Power, where we look at the latest moves in energy prices. We speak exclusively to the chief executive of the French utility, ENGIE, Catherine McGregor, and to the IEA executive director, Fatih Birol. Now, you can send in your questions on IB Plus TV Go. Now, to look at the markets, to look at the volatility and some of the things out there, we're joined by Jane Foley, head of FX strategy at Rabobank, to discuss the latest market moves. Jane, I have 1,000,001 questions, so thank you so much for showing up this morning to be grilled. First of all, what do you do with a lot of these currencies? So the currencies, even if you look at what happened to Euro, Swiss, I mean, they're really on the move. But then you have to ask yourselves, okay, ruble, should we just forget about it? And then some of the currency that are very commodity rich.
Well, I think for the ruble, yeah, I think forget about it. I don't think the price on the screen really is a reality of the price. But, you know, some patterns have been emerging, and those patterns, certainly in the G10, have been really put on the head this morning. So the patterns that had been emerging really over the last couple of weeks had been, you know, the bottom of the G10 table was stocky, performing badly, along with those Eastern European currencies, of course, Euro quite near the bottom of the table. And at the top were those commodity currencies, the Aussie, for instance, the New Zealand dollar, the Canada, the dollar, and the yen and the Swiss franc, sterling, you know, somewhere sandwiched in the middle. But of course, if we look at the performance table today, what do we see? We see the stocky coming back, we see the NOK coming back, and so some of those European currencies, given this reprieve by this news, that of course the Europeans could be coming together and they could potentially issue debt.
Yeah, I mean, the concern is that, of course, maybe they don't, right? This is a report that they're talking about. It's on the table. We've never seen something like this on the table. But what if someone says, no, because actually it's too much fiscal spending and it's just not the right time? Then do we have just a lot more volatility in currencies?
I think we do. I mean, you know, that news stories, I think, evoke memories of the recovery funds. It's something that came in after the start of the pandemic, you know, when the fiscal authorities in Europe were coming together. There was suddenly some sort of glue in those fiscal authorities that had always been lacked, you know, since the start of the euro back in 1999. And that really formed this idea that maybe the euro could, after all, you know, be some sort of safe haven, because if they were issuing debt, there was somewhere for safe haven buyers to go.
Yeah, but if 40% of your energy is from Russia, I mean, I don't know what fiscal spending, even if you throw everything, kitchen sink at fiscal spending, like what can it actually do? You know,
I would agree with that. And I think today's reaction that's been turned on its head is perhaps short term. We need something more solid before we can go further. And I think the reality is that Europe's energy security there's a massive question mark. There's a massive fog, therefore, over the economic outlook for the Eurozone. Will it go into recession? You know, can it avoid recession? That sort of fog, and therefore the fog over the ECB policy, means that there's that big cloud of uncertainty over European currencies, and that will remain until we get more concrete news.
Yeah, and Jane, I don't want to pour water on this, because you know, the fact that the EU is even considering this massive joint bond sale to fund, you know, energy and defence is huge. But again, does it actually, you know, help with stagflation, or is this something that we just need to get used to?
Stagflation is here anyway. I think we know that. We know that we have the risk of higher prices. Yeah. It's very difficult now to see Eurozone inflation, you know, below that 5% level, you know, on an average, say, for the rest of this year. We know that we're going to have slower growth. We know that higher energy prices takes money out of consumers' pockets, and therefore there's going to be less demand and everything else. So that we know that we have those two things. We know that we're going to have higher inflation and lower growth. However, if the European authorities can do more on the fiscal front, if they can show more of a united front, if they can show that sort of cohesion that's always been lacking, that economists were worried about back in the 1990s at the start of EMU, that is a massive step forward for the euro, and it does alter structurally the outlook. So this is really big news, but of course we need more details before we can, you know, really be confident about this. So it is a big step forward, but for the time being, certainly over the weeks ahead, most of those clouds over the euro and European currencies are still there.
Jane, my fear from the very beginning was that there was a second, you know, round effect on something, and I kept on being told, no, it's okay, we can freeze out Russia without really anything happening. Now there's, you know, nickel is a huge concern, and a Chinese bank is embroiled. But what's liquidity like in currency markets?
Well, you know, I think it depends which currencies that you're looking at. I mean, certainly, as I said, we can forget about the Russian ruble. People can't really trade with the Russian counterparts at all, so therefore the liquidity is gone. I think if we look more in the staples, if we look at euro dollar, I don't think liquidity is a problem problem at all. So clearly it depends where you're looking. I'm not sure about the Eastern Europeans, but I would imagine that there's probably less liquidity there than perhaps normal. And certainly if we look at what happened in nickel yesterday, liquidity was a huge example of what happens when liquidity dries up. So we know that it is a problem. I think you're right to be worried about second-order effects. I think, we've got nickel that will affect potentially the manufacture of EVs and other batteries. But I think before that, we've got to consider food production. And I think that's been a concern over the last couple of weeks. And I think really for people in North Africa, for instance, who had been reliant on wheat from the Black Sea area, this is a massive concern and something which will perhaps almost certainly affect Europe, perhaps with another wave of refugees.
Jane, thank you so much. Jane Foley, head of FX strategy at Rabobank, stays with us. So we'll talk a lot more, of course, about some of the third-round effects, of course, the influx of refugees, what that means also for spending across the board. Now, later this hour, Bloomberg Price of Power, where we look at the latest moves in energy prices. We speak exclusively to the chief executive of the French utility, Engie, Catherine McGregor, and to the IEA executive director, Fatih Birol. You can send in your questions on IB Plus TV Go. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, the big question facing Russian debt owners is, of course, whether they ever get their money back. Some holders of $1.3 billion Gazprom bonds due Monday said they were repaid in full and in dollars. But with a war raging and frozen foreign reserves, the future, of course, remains very unclear for many other bondholders. So we're now joined by Bloomberg's distressed debt reporter, Irene Garcia Perez, who's been doing some really great reporting on all of this. So Gazprom, Irene, paid. What about Rosneft?
Rosneft is expected to pay tomorrow. It had to pay on Sunday, but it was a public holiday in Russia today and yesterday, so it's expected tomorrow.
So, and you were explaining to me, and I've been trying to follow it very closely, that there was basically a decree by Putin on Sunday saying if you're someone that is giving me anxiousness or putting on sanctions like the UK and the US, and you're a bondholder, you go to the bottom of the list. But are these affected by that decree, these two coupon payments?
In theory, yes, but the caveat with those is that the money was transferred before the decree, or that's our understanding. Yeah. And the other thing is that they had the money, it's European subsidiaries, they had the money already outside of Russia.
Yeah. So can we just make it clear, if they pay back in ruble, this is basically a default?
Yes, unless creditors agree to be paid in rubles.
Right, because we don't have access to it, you'd have to open a ruble bank account. So it's basically like saying, guys, we won't pay you.
You can't unilaterally decide as a debtor to pay in something else than what you agreed on the documents. So
I keep on hearing, from Russia, the Russian side is retaliation. We're also looking at Nord Stream 2 and possibly Nord Stream 1 and closing off the taps. Why would there be in their interest to actually pay bondholders at this point for Rosneft?
So, well, for anyone, avoiding default is about having access to capital markets. Now, this seems tricky anyway for some time. But the idea, at least for the sovereign, the corporates might be different, but for the sovereign is to show strength and that, despite the sanctions, we are still delivering. And also to keep other investors happy, mainly China in this case.
All right, Irene, thank you so much. Irene Garcia Perez there with some of great reporting, really, to understand exactly what's going on in the markets. Now, let's talk more about the broader markets with our Lim Thomason, who follows markets for us. And we're back with Jane Foley, head of FX strategy at Rabobank. Jane, look at this chart. It's a great chart because we're talking about some of the currencies of commodity and energy exporters, Indonesia, Malaysia, Australia. They've unsurprisingly been more resilient. But look at this chart. The flip side to all of this is basically that the Chinese yuan's piercing through the roof against the trade-weighted baskets. And you can see that quite clearly on the chart on the screen. So, as Russia is increasingly cut off, can yuan kind of emerge as a global currency?
Well, this is a very topical discussion. I mean, what we've got to remember is this is a managed exchange rate. Yeah. So this is not, it's perhaps not right to compare it to some other freely floating exchange rates. But there has, of course, been a lot of reports recently about, what countries can do if they want to bypass SWIFT. And, of course, a lot of these discussions about bypassing SWIFT have been going on for years because, Russia, of course, had sanctions back in 2014. We've seen after the US pulled out of the Iranian nuclear accord, we saw Europe actually, trying to bypass the dollar and using a different payment system to deal with Iran. So from that point of view, this is a really topical discussion. Now, China has been quite successful in some parts in having more Chinese yuan invoicing and having different payments that avoid SWIFT, that avoid US dollars. But we're looking at really small amounts compared with SWIFT. So what we're seeing is that we are seeing there's this movement of some parts of the world, Russia, China, the EU, trying to bypass the dollar payment system. But I think we're talking about a 10-year conversation, really, not something that's really going to have an impact over the next year or two.
Yeah, it's amazing how actually we seem to be so short-term at the moment because we're trying to figure out exactly the fallout effects. Lynn, give me a sense of what's happening with nickel. So our Danny Berger has been doing some research, also went historically back to the last time that the LME suspended a metal, and that was in 1985, and they suspended tin trading for 4 years. I mean, this is a completely different story because it's about margin calls. But, what's the situation with nickel and who it could bring down with it?
Yeah, absolutely. I mean, nickel is absolutely a crazy story today, and I think one that we're all watching. For me, sort of the interesting thing to look for is what does it mean for the LME in sort of controlling this volatility or managing these extremely, big shifts in markets that we're seeing. And I think, just the fact that you're seeing the trading halt today certainly raises some questions as to what's going to happen next.
Jane, let's also look at some of the, the signs of U.S. dollar fund stressing, and we have a good chart looking at that. I think our Valerie put it together. It's number 1392 if you're following on the Bloomberg terminal. But what does this show us?
Again, there is some stress in funding. I mean, that's almost inevitable. We have the signs of panic overlaying certain markets. I mean, certainly if you look at, again, wheat, if you look at the futures, the CBOT, if you look at nickel, is it a surprise? If you look at Russian ruble, if you look at some of the Eastern Europeans. So, again, there is stress in the market, and this is basically what this is telling us. What we want to know is whether or not there has to be a response at this point from central banks, whether or not there's enough liquidity in the market, whether or not we're going to see anything on that front. And that might come if signs of stress do worsen.
Are we underestimating, Jane, the impact that actually wheat prices have on, global inflation outlook, food prices? We're talking about refugees, that just the world is going to get a whole lot worse before it gets better.
I think it's easy if you're sitting in a rich country to underestimate that sort of impact. I mean, we will be looking at higher prices for our wheat products. If you were based maybe in North Africa, you are looking at a lack of alternatives that you would have. So I think we are potentially looking at, degrees of hunger for certain groups of people in some of the poorest countries in the world. And that is something that for us sitting in rich countries, we cannot ignore. So we are potentially looking at more refugees unless this calms quickly. Now, we've got to remember that the harvest season for the Black Sea area is sort of June, July, and that's going to be really important. If the sanctions are still there, if the difficulty getting shipping in and out of those ports in the Black Sea are still there in the June-July period and just beyond, then that could be really critical.
Yeah, and we have there actually a quote by Elon Musk, First Nickel, one of the things that's most used in electric vehicles. It could also delay some of that impact on ESG. Lynn, talk to me a bit about, the EU considering this massive joint bond sales to fund energy and defense. That's really what's giving a lift to a lot of the markets, where yesterday they were slammed because they were worrying about inflation. But could this be a short-lived bounce?
It certainly seems that way at the moment. I think, looking beyond the move today, there's still a lot of questions as to what happens in markets and how people can deal with the inflation shock that's coming. I thought, the comments about agriculture prices were really spot on. Food and hunger is going to be a massive issue for a lot of global economies coming up.
All right, thank you both for joining us, Lynn Thomason and Jane Foley, Head of FX Strategy at Rabobank. Now, we'll have plenty more, of course, on nickel, metals, energy. We'll talk a little bit about the EU can do later this hour. It's Bloomberg's Price of Power, where we look at the latest moves in energy prices. We speak exclusively to the chief executive of the French utility Engie, that is Catherine McGregor, and to the IEA executive director, Fatih Birol. Send in your questions on IB Plus TV Go. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's get straight to the Bloomberg. First Word News, here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Here in the UK, MPs have voted in favour of a package of measures to toughen government powers and speed up sanctions against Russian tycoons. The Economic Crime Bill looks set to become law within days after it was rushed through the House of Commons. The legislation sets up a register identifying the ultimate foreign owners of UK real estate, preventing them from hiding behind shell companies. Now, a new study warns even a mild case of COVID-19 can damage the brain and affect thinking. Researchers from Oxford University found COVID-linked brain damage months after the infection, including in the region linked to smell. The scientists also found brain shrinkage equals to as much as a decade of normal aging. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Up next, it's the price of power, where we analyze and discuss the ongoing energy crisis with the top lineup of guests: ENGIE's Chief Executive Catherine McGregor and the IEA's Executive Director Fatih Birol. You can send in your questions on IB plus TV Go. The two big pieces of news: EU considering massive joint bond sales to fund energy and defence. Also, the London Metal Exchange halting nickel trading after an unprecedented 250% hike. We'll talk about both those stories. We'll look at the markets, stocks rallying on some of the EU news. This is Bloomberg. Good morning, everyone, and welcome to Bloomberg Price of Power Special, looking at the global energy crisis. I'm Francine Lacqua here in London. Now, Russia threatens to cut gas supplies to Europe via Nord Stream 1. The EU is drawing up plans to limit its reliance on Russian energy. U.S. gasoline prices hit a record high. The spiraling cost of filling up a tank adds further pressure on American households. Stay with Bloomberg Price of Power. Today, we speak exclusively to the Chief Executive of the French utility ENGIE, Catherine McGregor, and the IEA Executive Director, Fatih Birol. Two interviews you don't want to miss. You can send in your questions on IB plus TV Go. Now, this is the picture for the markets. There's been a lot of volatility going on over the last hour or so. If you look at European stocks, now they're really buoyed by the fact that there's a proposal on the table. It's a Bloomberg scoop that the EU will look at possibly having a big joint bond issuance to actually fund energy and defense. This is something that we haven't really seen before, certainly not for this type of event in energy and defense. It brings us back to maybe what we saw during the COVID crisis. The 10-year German bond yield, watch out for that, as it could move the natural gas futures gaining some 3.8%. We really delve into how energy can supplant, or how Europe can supplant, some of the dependence on Russia. The timeline for that, of course, is crucial. If it takes too long, then it could be pointless. And then nickel, this is an amazing story. It gained some 250% over the last couple of days, currently at 80,000. The LME had to suspend this, and this is also because they're waiting on a margin call. There's a Chinese bank embroiled, but this is actually behalf of a client. Now, Russia threatening to cut off its natural gas supplies to Europe via Nord Stream 1. The move, which would be retaliation for sanctions, could worsen energy market turmoil and drive consumer prices higher. Now, on top of that, the U.S. and its European allies are discussing a possible ban on Russia oil exports. Well, what was unthinkable 10 days ago is now not impossible. Oil prices jumping on talks of possible sanctions, with the world bracing for an inflationary shock. Well, my next guest is the Chief Executive of French utility ENGIE. She's warned that any decision to stop Russian energy imports would impact the energy supplies of France and Europe next winter. Russian gas reported to represent about 20% of ENGIE sales worldwide. We are delighted to be joined by Catherine McGregor, the Chief Executive Officer of ENGIE. Welcome to Bloomberg and to our special Price of Power special. Catherine, give us a sense, actually, of what you're planning to do with Russian oil and gas, and whether Europe can, if they turn off the taps, what does it mean for Europe?
Yeah, sure. And good morning, everybody. First of all, of course, maybe worthwhile to remind that we are strongly condemning the invasion of Ukraine, and my heartfelt support for the population that is affected. So your question is related to the dependency of Europe on their gas supply. So, Europe is depending on Russia for gas supply up to 40%. So it's a significant dependency. And of course, this dependency varies from one country to another. Some countries, actually, this dependency is very, very high. And it gives you a little bit the size of the challenge should indeed, the supply of Russia completely dry out in the coming weeks or coming months. So it is a challenge for Europe. Obviously, I don't talk too much about oil. Engie is a gas purchaser and supplier. We are not producing gas. But I'll focus on gas for the sake of the interview.
So Engie owns 9% of Nord Stream 1 pipeline. We're hearing from the Russian side that they could cut it off. How comfortable are you in still doing business with Russia right now?
Look, I mean, as on a personal front, of course, you can only be horrified with what's happening. And at the same time, as a responsible energy player, Engie has to continue to provide gas to its many customers, both residential and industrial, who depend on this gas from economic, absolute sound reasons. But of course, should EU decides sanctions on the gas, of course, Engie would comply in the minute.
Yeah, but so unilaterally, Engie would not join other companies in cutting all ties with Russia, as things stand.
So Engie today is not present in Ukraine, doesn't have any operation in Russia. So the reality for Engie is a little bit different. We do buy gas from Russia, and I think you've just reminded us that it was about 20% of our total gas sales and gas consumption. And at this stage, we continue to buy the gas from Russia. We are obviously thinking about continue to be there for our customers, and that is really what is driving us. And of course, again, should sanctions be decided at the European level, of course we would comply.
Of course. What would be the consequences for gas prices if Russia were to turn off the gas supplies?
Yeah, I mean, we would probably then enter a new world. Prices which are already quite high would probably go to newest high, and markets will need to be regulated in some shape or form, both from a physical supply, but also, of course, from the price point of view. So you could expect a very, very high volatility.
High volatility? I mean, how extreme would be the price shock? And what does it mean for actually subsidies and price caps in France? So look, the price in Europe is driven by your European market. So it's a it's a European-driven market. So the gas price is really driven by European market. And what we are anticipating, of course, is regulation to kick in ahead of such a shock, and therefore measures to be taken in anticipation. I think it's really important indeed that such a shock would be anticipated, and our expectation would be that as much as we can anticipate and moderate the volatility that would be expected in such a market, we would welcome that. You're also one of the European companies that provided a loan to Nord Stream 2, which has now been suspended. What's the financial consequence of that for Engie? Yeah, so as a lender, we are exposed to the credit risk on this loan, and we have, mentioned the exposure, which is up to just below 1 billion euros. And of course, the credit risk is something that potentially could materialize if indeed, the company was to be bankrupted. Of course, we need to look at the longer-term transition. Is it at all possible to, for the European Union to actually meet their target of reducing Russia gas dependency by 80% this year? So, of course, longer-term, the case for the energy transition is stronger than ever. Energy transition is obviously a diversification of source of energy. It is also a much higher reliance on renewable energy. Renewable energy is produced domestically. It's almost infinite once installed. So the case for renewable energy is stronger than ever, and that frankly
calls for, what ENGIE is about, which is acceleration in renewable energy. I would also like to call your attention to the biomethane and biogas potential, because this is gas, and gas has a major role to play still in the energy transition to help stabilize and compensate the intermittency of the renewable. And for that reason, biomethane and biogas has a potential that we feel can be accelerated even in the short term. In France alone, for example, biomethane was about 6 terawatt-hours last year, and we think that can be doubled in a fairly short term, Francine. So yes, energy transition, in a way, potentially can be a strong winner from, this crisis because of the case of the renewable energies, and that includes electricity and gas.
But despite your efforts, your tremendous efforts and the tremendous efforts of ENGIE, your position as leader in renewables in France, France still relies, I think, about 70% for its energy needs, for example, on nuclear. So what's the right mix to accelerate that transition?
Yeah, I think France has made the choice of a balanced mix for the future. And to be honest, balance, in my mind, is the true source and secret for resiliency. The obsession that everyone needs to have is to find the right balance between low carbon, affordability, robustness, and of course, social acceptability, which, as you know, can be a challenge sometimes in our countries. And to have a diversified energy mix is, for me, clearly the secret of that resiliency, affordability, and of course availability of the energy supply. It is really, really the key. So not one technology can be the only winner. To have a diversified source of technology is important. That can include nuclear, as France has made the choice, but nuclear won't be enough. You need to have a lot more solar, you need to have wind, and of course biogas. And this is why it is so central to ENGIE strategy.
Catherine, we're also following this incredible nickel story with the LME now suspending it because of a margin call that needs to be paid back, which for the moment we haven't seen yet. This could impact a lot of the renewables. How much do you use nickel in terms of your renewable projects, and what could be the longer term impact of this?
No, I mean, I didn't quite get completely, Francine, your question, but what I can assure you is that, ENGIE obviously has a very strong balance sheet. We are in good shape, and we have no intention to stop continuing to invest and accelerate our development in renewables.
What does this mean?
And now
for
I get your
ENGIE?
question.
Yeah, it was on nickel, but I mean, it's moving so fast, and actually nickel, extending the surge, and of course the LME now suspending that. So I know things are moving extremely fast. Like, is there a danger? The broader concern, Catherine, is that actually that you don't have access to some of these materials or some of these metals that are so needed in the energy transition because of the war in Ukraine.
Yeah, look, sorry, I get now your question, Francine. So. Diversification of supply is going to be very, very important. And you're right to say that we're still working out through all the different components of our supply chains across different technologies. But again, from a principle standpoint, it does speak to having as much a diversification of technology, of sources of supply, both in terms of nature of supply, but also where they come from. And that's really where we're going to be driving more robustness and resiliency. And that's just going to be, I think, when time goes by and we will look at this crisis, it's going to be one of the key lessons.
Catherine, thank you so much for joining us today. The ENGIE Chief Executive Officer there, Catherine McGregor, joining us with a nice roundup of exactly some of the challenges and opportunities going forward. Now let's get straight to the Bloomberg First Word News on price of power. Here's Leanne Gearns. Hi, Leanne.
Hi, Francine. The European Union is set to unveil a plan to jointly issue bonds on a massive scale to finance energy and defence spending as it copes with the fallout from Russia's invasion of Ukraine. Bloomberg understands the proposal may be presented after after an emergency EU summit in France at the end of this week. Upgrades to the bloc's energy infrastructure is likely to be a key part of that very plan. Now, Russia has threatened to cut natural gas supplies to Europe via the Nord Stream 1 pipeline. Energy Minister Alexander Novak warns the Kremlin has the right to take actions that mirror the penalties imposed on the Russian economy. Meanwhile, sources say the EU is mapping out proposals to cut Russian gas imports by almost 80% this year. The plans to be presented later today will include tapping new gas supplies and increasing energy efficiency, which aims to deliver independence from Russia well before 2030. And the cost of rescuing failed UK energy supplier Bulb could jump to as much as £3 billion after wholesale natural gas prices did reach a fresh record. Bloomberg understands the administrator running the company is using taxpayer money and needs more funds to purchase energy for customers. The cost was initially pegged at £1.7 billion. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Now, up next, we'll continue the conversation on the price of power with the executive director of the IEA, Fatih Birol. Pretty crazy swings when it comes to energy and metals. You can send in your questions on IB Plus TV Go. This is Bloomberg. Economics, finance, politics. This is Bloomberg Price of Power, looking at the global energy crisis. I'm Francine Lacqua here in London. Now, the market's really on the move. A lot of support for European stocks because of this possible joint issuance of debt, a pretty hefty issuance. It's a Bloomberg scoop. It has not been approved, but it would be the EU considering this massive joint debt bond sale to actually fund energy and defense. You can see nickel, our biggest focus, when the LME halts nickel trading after unprecedented 250% spike in the natural gas futures. I have not seen a downward move for quite some time, down 2%. Now, Energy Aspects Director of Research, Amrita Sen, joined us earlier to discuss tightness in energy markets following Russia's invasion of Ukraine.
It is going to be heading higher. Obviously, it's never going to be in a straight line. Potentially, Iranian barrels could come back. U.S. is also talking to Venezuela about potentially releasing removing some sanctions. We don't think it's quite there yet. But yes, of course, might get a few corrections on the way, but ultimately this is headed way, way higher.
So what does that mean, Amrita, in terms of what we should be looking out for? Way, way higher is what, 185? Can we reach 200? And what happens to demand then?
I mean, I would say you need at least 150, if not higher, for a material slowdown in demand growth. And I think that's the big issue we have right now. In a post-pandemic kind of recovery phase, demand is growing pretty rapidly right now. And even at these price levels, we aren't seeing any kind of significant slowdown in demand. And the other issue is a lot of countries are actually bringing back subsidies because of such high prices. So consumers aren't fully seeing these prices either.
Why is Saudi Arabia and OPEC Plus not stepping in?
I think it's a very complicated situation for them. Russia is ultimately a member of OPEC Plus. And if you think about it, I mean, this is not something, this situation hasn't been created by them. And ultimately, they also don't have a lot of spare capacity, something we've been talking about for some time. If Saudi Arabia and UAE, let's say they bring all of their spare capacity to the market right now, in the summer when demand could be even higher, what happens then? So they do have to manage this very, very carefully.
Energy Aspects founder and director of research, Amrita Sen, speaking to Bloomberg a little bit earlier. Now, for a map on the terminal, these ships have either a Russian flag or the country of operation of the ship owner, manager, technical manager, operator, or beneficial group is in Russia. I don't know whether we have it, but it's a good way of actually looking at some of the vessel search. Some of them will not actually be sanctioned, but traders find it more and more difficult to go out there and buy Russian oil. Now, a strategic release of crude announced by the IEA will see 60 million barrels of oil from member countries inventory stockpiles deployed to help compensate for missing Russian output. The move has not done much to quell oil markets, though. The price of crude has continued to rise, with some traders betting that it'll even break $200 by the end of the month. Well, joining us now to discuss all of this is Fatih Birol, Executive Director of the IEA. Fatih, thank you for joining us. It must be an absolute nightmare trying to predict the price of oil. How high can it go?
It can go higher than what we see today. It will depend on a few factors, but mainly the behavior of Russia, whether it will continue the invasion, and we don't see if we see or not a ceasefire over there, but also what kind of measures the producing countries, other oil-producing countries will take, and what kind of measures the consuming countries are ready to take. So these are three main factors: Russia's behavior, political behavior; second, producing countries, oil-producing countries' behavior, decisions; and third, consuming countries' decisions they have taken and they may be taking in the next days to come as well.
Fatih, the IEA has said its release of 16 million barrels of oil was a first step. Given the market turmoil and the market disruption has increasingly intensified over the last couple of days, would you be looking at releasing more?
Thank you. I have mentioned that this was an initial release of stocks. We are following monitoring the markets closely, consulting with our member countries, but also with other producing countries around the world. And when and if necessary, we will definitely recommend our member countries to release more stocks. I should mention to you that the amount of stocks we release as of last week was only 4% of our stock reserves. There is a lot of oil there, and it will be at the disposal of the markets in order to help to stabilize the markets. But I should tell you that I am rather disappointed with the several producing countries who did not take the necessary measures to comfort the market. Those colleagues, those countries who said they are there to stabilize the markets, we have not seen that recently, and I would say this was really disappointing from my perspective.
Yeah, why is the IEA then not pressuring Saudi Arabia more to increase production, or is that happening behind the scenes?
So we are talking with all the countries around the world. We are reminding them that if the markets, the turmoil continues, it is not in the benefit of anybody, as I see now. But it is, of course, up to them to decide. I think the previous colleague you talked with saying that there was not enough spare production capacity. This is not right. There is significant amount of spare production capacity, and one may take some of them, bring it to the markets. And I would also tell you that very soon we are going to come up with some suggestions how to reduce the oil demand in a hurry. What we can do there on the demand side, some regulatory, voluntary measures that the governments can take, the consuming countries, to reduce the demand, in addition to the possible impact of the high oil prices on the demand growth.
Fatih, can I go back to this possible second release, actually, of stockpiles, emergency stockpiles? You said this was a minimal amount compared to what you have. If Russia were to turn off the taps, would it also be a political decision to actually just put a lot of barrels out there on the market as a significance of what we could do?
Yeah. So as I said, this is only what we have released. 60 million barrels is only 4% of our total reserves, and if we see the need, we can release substantial amount of oil to the markets. They are all on the table. We are monitoring it very closely.
Is it time for OPEC Plus to expel Russia?
I think it's up to them what they are doing, with whom they are working together. It is their decision, but what are the consequences of those decisions will be understood in the next months to come, if there are any.
Are you concerned with actual shortages in Europe's diesel market, Fatih?
I see there are already difficulties in the markets. There's a significant gap, and we are working with many governments around the world how we can narrow that gap. Increase of production from several producing countries, reduction of demand, and maybe additional stock release from the International Energy Agency.
So who has said that there, first of all, are you receiving any actual reports on these shortages on diesel? And who have you had conversations with that are ready to step in?
I think we talk with all the countries who are really responsible to address this, feeling responsible with this situation in the markets, who want to help, who want to solve the problem on the producing side and also on the consumers' side. And we are following the markets on momentarily, to be honest with you. Yeah. And we look at how we can solve this diesel problem. But it's not the only problem. We have other challenges as well in different markets, from India to Latin America. There are several problems, and it will amplify those challenges if we are not able to bring new oil to the markets.
Fatih, thank you so much. As always, Fatih Birol, their executive director of the IEA. Oil pushing higher, of course, as the U.S. is also moving a step closer to imposing a ban on Russian crude imports. Well, that's it for the Bloomberg Price of Power. Bloomberg Surveillance Early Edition continues in the next hour with Matt Miller, Kayleigh Lyons in New York, Anna Edwards in London. This is Bloomberg.
Framework we've used is that we view this as a growth scare.
Asset allocators are really struggling now to shift their portfolio. The good news is that I think markets have not been complacent at all on this.
We were in a commodity squeeze already before all this happened, which is why it's so dramatic.
This is Bloomberg Surveillance Early Edition with Anna Edwards, Matt Miller, and Kayleigh Lyons.
It's 10 a.m. in London, 5 a.m. in New York, and 6 p.m. in Hong Kong on this Tuesday, March the 8th. Our top stories today. An unprecedented day at the London Metal Exchange. Trading in nickel has been halted after a stunning price hike led to a short squeeze. A warning from Russia. Gas prices surge as Moscow threatens to cut supplies to Europe. Meanwhile, stocks rally on news that the EU is considering joint bond sales to finance energy and defense spending. And congressional crackdown. U.S. lawmakers agree on the outline of a deal to bar imports of Russian oil. A vote in the House could take place on Wednesday. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kayleigh Lyons in New York. And Kayleigh, we were moving to the downside on risk assets here in Europe until we got news of the possibility of joint bond offerings here in Europe. And that changed the environment. But the Asian session still weighed down by a focus on higher commodity prices.
Yeah, that's absolutely right, Anna. Those optimism that prevailed or is starting to prevail didn't hit quite in time for the Asian session overnight. It was broadly a down day when it comes to those major benchmarks. The MSCI Asia Pacific Index was down by about 1.5% or so. You had China down 2%, Hong Kong also down. It was really technology that was the big drag once again. The Hang Seng Tech Index down for a fifth day in a row, lower by 3.2% overnight. And of course, that's as of course inflation really is at the forefront of concern, due in part to higher commodity prices. And of course, nickel was front and center in that regard today, an unprecedented 250% price spike. That led the London Metal Exchange, as Anna said, to halt trading of that metal. But before that, the LME also lent additional time to China Construction Bank Corp to pay hundreds of millions of dollars in margin calls that were due yesterday. So that unit of that firm in China is not in default at the moment because it was given that additional time. Still, though, it was down about 1.5% overnight. Finally, I just wanted to point out that as we're seeing inflation fears really front and center, even though it is leading to some easing of selling pressure when it comes to risk assets. You are still seeing that selling pressure reflected in the global bond market. That was true too in New Zealand, especially at the short end. That 2-year yield moving up 12.5 basis points to 2.45 or so, Matt, and that is the highest going all the way back to January of 2016.
All right, we see yields rising here as well. Futures are up too. S&P futures not really getting a lift from the EU bond news. We were already up after such an abysmal session yesterday. We closed down almost 3% in the cash trade. The U.S. 10-year yield up 6.5 basis points right now, 183.70, as investors feel comfortable enough to sell the perceived safety of government debt. NYMEX crude continues to rise, 122.28 a barrel. So Texas Intermediate getting closer and closer to 125. And you see Bitcoin right now up about 3%. We've seen this really correlated strongly, I say almost every day, with risk assets, and that continues to be the case. I think the level Tom Keene is watching for his Bitcoin is 40,000. So we're getting closer right now at 38,915. Anna?
Tom will keep watching then. Yeah, Matt, you're right that the session yesterday was very negative, wasn't it? And we started the European session today with that same mentality, focused on commodity prices. What was that going to do to global growth? And so stocks continued to sell off. But then we got that news that we mentioned in the headlines about the possibility of Europe raising debt to fund investments in infrastructure, in energy, in defense, and specifically energy and defense. And that turned the sentiment around for European stocks. And of course, we see the CAC 40 and the Xetra DAX benefiting from that, and the IBEX and the FTSE MIB benefiting even more. And talking about benefit, when it comes to the bond markets, that's where we started to see divergence across Europe. We see spreads tightening for the Italian bonds over German bonds. That tightening taking place because, of course, burden sharing, fiscal responsibility being shared around Europe. If that is what we're going to be talking about a little bit more, that brings in those spreads and improves the prospects for Italian debt. This is the gas price benchmark. We've been above $300 euros a megawatt hour. That was in yesterday's session, but today making a move to the upside just by a fraction. Just want to keep an eye on where we are on that one, given the warnings we got from Russia overnight, that messaging from Alexander Novak, the energy minister in Russia, that there was the possibility of cutting supplies to Europe. Of course, Europe shuffling things around very quickly and trying to respond and trying to insulate itself where it can. In terms of the nickel news, and Kaylee was pointing this out in the context of the Chinese connections there, nickel we saw on an incredible tear, up by 90% in yesterday's session to $55,000 in the session yesterday. And then we saw it on the move overnight further to the upside before the LME decided to stop trading at around the $80,000 mark. So that continues to be a focus. And this is a French business that trades in nickel, that mines nickel. It is up by 3.4% on the back of those higher prices. And this is an interesting one. Uniper, this is a big utility in Germany, and it's one of Europe's biggest buyers of Russian gas. And they have said they will not sign any further long-term contracts with Russia. They will, though, use their existing contracts to continue to take that delivery through the pipeline, but they won't sign new ones. That stock is up by more than 8%, Kaylee.
Kind of feeds back into this idea of self-sanctioning. And of course, we're seeing a laundry list of companies that keeps getting longer, pulling out of the Russian market. So we will continue to watch that in the day ahead. As for what else is ahead today, Apple will be holding its first product unveiling of 2022. A new low-cost iPhone and updated Macs with Apple-made chips could be introduced. It's also International Women's Day. Throughout the day, we'll be speaking to a variety of female leaders in the business world. On the economic front, we'll get some U.S. data, including trade balance and wholesale inventory. And of course, geopolitics remains firmly front and center. Ukrainian President Vladimir Zelensky will address UK members of parliament later on, Matt.
All right, we'll be watching that very closely, but I want to get to the Bloomberg scoop on the joint debt. The European Union considering joint bond sales to help counter the fallout from Russia's invasion of Ukraine. And this would be really a monumental move, the likes of which we haven't seen since the beginning of the pandemic, something that was considered in previous crises but not used. We've got team coverage here from Brussels. Our European correspondent Maria Tadeo joins us. From D.C., we're joined by our Washington correspondent Joe Matthew, and from London, we're joined by Bloomberg's Danny Berger on the commodities fallout, that huge run-up in nickel really front and center. But first off, Maria, let's get to the new news here, the possibility of joint EU debt, and it could be massive.
Yeah, and you know, Matt, just to make it very simple, strip away the technicalities here, which are still being worked on, this would look very similar to the Next Generation EU. Now, that's more jargon coming out of Brussels, but I'm sure you remember that is the pandemic response that was put together. Essentially, it's the Commission and the European institutions, which are rated AAA. So this is a top quality that go to the market. They tap markets, and then, of course, they kind of just disperse funding according to different criteria to all of the European countries. But what is key here, of course, is that this is done jointly. Now, this time around, it would be a mechanism that would look very similar to that. So the European Commission would go to the markets, tap the markets, and so on. But the key here is that European officials want to make this quickly. You know, they want to send a political signal that there will be a plan to deal with the economic fallout of the Ukraine crisis. So we understand that the details are being worked on, but by Friday, so that is in 3 days' time, European leaders who will meet in Paris would want to give the political approval to this, and then you get the technicalities and the technical work that will have to be done on this, but they want to send a message as of this Friday.
Okay, so that fiscal consolidation project across Europe continuing there. We'll see what scale there is to it, as well as the political signal. What about the motivation for doing this, Maria? And part of that is to invest in diversifying energy supplies. And the reason to do that, very clear overnight with these warnings from Russia.
Yeah, well, here's the thing, Anna. Yesterday night on primetime news in Russia, Alexander Novak went on TV and said Russia has a right to counter sanctions from the West. The West is being very unfriendly with us, and that means that perhaps on the Nord Stream pipeline 1, remember the Nord Stream 2, that is politically dead, but the 1 continues to work and continues to operate. And he said we could cut supplies from that pipeline. It is our right to respond to the unfriendly actions of the West. Now, he also said, and put a number of this, we could see oil hit $300 a barrel. Now, the European Union today and the officials that I've spoken with, they say once again, this is Russia making threats. It's shown that it's not a reliable partner for the EU, but it also shows is that Russia is finding itself in a difficult situation that is now moving on the attack. Having said that, yesterday, once again, we heard from the Germans, we cannot unplug from Russia from one day to another. They don't support a full embargo. So it's one thing what you say on paper and the language, but the reality is, in many ways, we're still very connected to that Russian supply.
All right, Bloomberg's Maria Tadeo in Brussels with the European response. Thank you so much. Now let's talk about the U.S. response, because in Congress, key lawmakers have announced the outline of a bipartisan bill to bar imports of Russian oil into the U.S. The House could vote on the proposal as soon as Wednesday. OPEC Secretary General Mohammed Barkindo spoke yesterday on Russia's contribution to crude markets.
How do we survive this crisis? There is no capacity in the world at the moment that can replace 7 million barrels of exports.
Bloomberg Washington correspondent Joe Matthew joins us now from D.C. So, Joe, it might be hard to replace Russian oil, and yet Congress looks like it wants to move forward. Where does the administration come down on this?
Well, to be clear, President Biden could do this at any time, could ban Russian oil imports through executive order, and that is something that's being considered right now. Buy himself a little bit of flexibility. That is actually the way this could end if the president decides to do that. Having spent some time yesterday speaking with the leaders of France, Britain, Germany on this, they are clearly not on board. Remembering as well now, as Congress makes a move, they were unable to agree on sanctions in advance of the invasion. This new framework agreement that you mentioned, announced by leaders of the House and Senate Ways and Means committees, would do a couple of things. It would ban Russian crude oil imports. It would also give the president more power to tariff other imports from Russia as well as Belarus, and it would seek to expel Russia from the World Trade Organization, the WTO. President Biden, as I mentioned, though, knows he will have to go it alone here, and there are some concerns inside the administration that might give the appearance of a crack in the alliance. It's unclear exactly how this is going to end here, but there are also concerns domestically by refiners who are concerned about short-term interruptions and are asking for a transition period so they can replace that Russian crude.
Joe, is all of this going to help the administration, the government, get a new round of funding through?
I don't know if it's going to help. I don't know if there needs to be help, Matt. There's a bipartisan, bicameral effort right now. Everyone seems to be on board when it comes to relief funding for Ukraine. It's just a question of what the number is going to be. The initial request from the administration was about $6.4 billion. That crept up to about $10 billion in the last couple of days, and now there are reports that it could be as high as $12 billion. But, Matt, that would be part of the omnibus budget to keep the government operating as we head for, well, I won't say that we're heading for a shutdown because no one's threatening that on Friday. They might have to find a short-term solution to avoid a shutdown, though. There's a lot in that bill, including a $22 billion request for COVID response funding. That number is not as popular among Republicans.
Joe, thank you very much. Bloomberg's Joe Matthew. You can listen to Joe every weekday, of course, on his radio program Sound On. That's at 5 p.m. Eastern Time on Bloomberg Radio. Now, back to commodities. We were mentioning the wild ride in nickel earlier. The London Metal Exchange halted trading in its nickel market after an unprecedented price spike. Let's get the details then from Bloomberg's Danny Berger. Danny.
Anna, the price chart kind of says it all. And for our radio listening audience, think GameStop January 2021. It is a parabolic move that we more recently have associated with meme stocks. This is the look of a short squeeze. And bear with me while I explain how something like this could have happened. Last week, we saw a 20% rise in the price of nickel with supply concerns over Russia. If you're someone who is short nickel at this moment, your position all of a sudden is getting more and more unprofitable. A broker will say, okay, you need to put up more collateral to make sure that you can pay off that unprofitable position. But if you can't pay it off, you close out your position. And closing out a position causes the price to rise, causes more people to close out their position, the price to rise, snowballs and snowballs. And that's how we get a move like this, where it doubles in the space of just 5 hours. Now, the LME has a stake here to make sure things are calmer. Having people default could have knock-on effects for them themselves, and that's exactly what we've seen. They suspended trading of nickel today, saying that margin calls would be calculated on yesterday's much lower price. And also, people familiar telling Bloomberg they gave a unit of the Chinese Construction Bank more time to meet a margin call, something really unprecedented.
Yeah, so a lot of unprecedented moves in commodities. And natural gas is one that we've been seeing on a tear for quite a while. What do the moves look like after Russia's threat yesterday?
So we get this initial price spike of 30%, which I should say kind of feels like small potatoes compared to what nickel did, but it rallies 30% already at historic levels. It has calmed down somewhat since, with a more calm market after this bond announcement from the EU. Now, it's measured in megawatts per hour, so I think it's a little bit more simple to understand these moves if you measure it via gas. Measured as oil, it reached the equivalent yesterday of over $600 a barrel. Today, it's trading around $400 a barrel. The argument can be made, look, Russia is small when it comes to its contribution of the whole economy, but Goldman Sachs numbers show how important Russian oil is and the ramifications. Even though Europe says it wants to wean itself off, for now, Europe gas relies on 40% of it from Russia.
Heavily dependent. Thank you so much to Bloomberg's Danny Berger for that great breakdown. Now, as we talk about the moves we're seeing in natural gas, that is reflected in pre-market trading here in the U.S. when it comes to a movement of one individual equity, and that is Cheniere. Its ticker is literally LNG. It is a big LNG player here in the States. It is moving higher as we're seeing natural gas prices moving up by about 2% in early hours. Another stock moving to the upside, and this is an interesting one, Stellantis, of course, the automaker. It's down 20% in just the last 3 sessions, down about 27% year to date, but it's rebounding today, up about 5%. Of course, what's been dragging on the stock is the fear that the war in Ukraine, the resulting sanctions, could all make the supply chain issues automakers are grappling with even worse. But a little relief is coming into that stock in particular today. To the downside, though, Mandiant. This is a cybersecurity company that Microsoft was in talks to buy. It has now walked away from those talks. It was reported yesterday that Google instead is looking at a potential acquisition. The stock rose 16% on that in the Monday session, but giving back some of those gains today, down about 3% in early hours, Anna.
I'm sure, given the geopolitics, there are still a few people focused on cyber risks. Kayleigh, coming up on the program, the global economy is at a mounting risk of stagflation and potentially more recessions. We will discuss that with Sylvia Delangelo, senior economist at Federated Hermes. She joins us shortly. And more on the war in Ukraine with Georgina Wright, senior fellow at the Institut Montaigne. This is Bloomberg.
Welcome back to Bloomberg Surveillance Early Edition. We are simulcast on both Bloomberg Radio and Bloomberg Television. I'm Matt Miller here in New York with Kaylee Lines. Anna Edwards joining us out of London. Now, I've got a pretty cool chart for those of you listening on radio. I'll walk you through it. This is nickel, tin, copper, aluminum, zinc, and lead, all on one chart going back to the late 80s. And what it shows you is the move that we saw overnight in nickel, a jump of 111% to at one point over $100,000 a ton. It dwarfs any move in base metals that we've seen over the last, 40 years. So it's pretty amazing. Justina Lee, Bloomberg Markets reporter, joins us now to talk about what this kind of volatility means, Justina. This isn't just your typical short squeeze. This is something the likes of which we've never seen before.
Yeah, it really is pretty wild. I think this is an illustration of the chain reactions we're starting to see in the markets. Of course, it kind of started with everyone worrying about the supply shortage. Russia produces 17% of the world's, top grade nickel. But at the same time, we're kind of starting to see market participants having to cover their shorts and facing these margin calls. And the London Metal Exchange is trying to kind of stop things from getting worse. But I think with the war still raging, it's really hard to kind of see where this stops.
Justina, good morning. What kind of impact do you expect to see longer term from this story that the European Union is considering joint debt raising to fund investment in new energy sources, to take on their dependence on Russian gas, of course, and also to fund defense spending? I ask this because we saw an initial really strong rally in risk assets, but that is fading a little bit now.
Yeah, because I think, people were kind of happy to see this headline, but at the end of the day, this is still something that's in the talks right now. So kind of any relief from that is relatively long term. But of course, kind of that is also a big part of the energy transition story, kind of in terms of whether gradually kind of governments will be able to kind of wean their kind of reliance on these fossil fuels.
Yeah, absolutely. So still the question about whether they can really wean themselves off reliance on Russian energy. Justina, thank you. Bloomberg's Justina Lee joining us with the latest on the markets. You can get further analysis of the markets minute by minute. MLI Vigo, that is the function to use on your terminal. This is Bloomberg.
Now keeping you up to date with news from around the world, here's the first word. The Pentagon says that security assistance from the U.S. and allies continues to flow to Ukraine. A Defense Department spokesman says Ukrainian forces are using the aid effectively. Meanwhile, the U.S. believes Russian forces in Ukraine are facing morale, supply, and fuel problems. Speaking of fuel, U.S. drivers are now paying more than ever for gasoline at the pump. According to the Auto Club AAA, average pump prices are now $4.17 a gallon. In California, the most expensive state for drivers, gas averages $5.44 a gallon. Demand has been surging, and the war in Ukraine has threatened global supplies. Speaking of the war in Ukraine, we do understand that the EU is readying more sanctions. It aims to sanction 14 wealthy Russians and dozens of lawmakers. That is according to a plan described by several diplomats. Coming up, we'll have more on the war, on sanctions, the inflation implications of it all, and what that means for the global economy with Sylvia Dell'Angelo, Federated Hermes senior economist. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. There's never been a day like this at the London Metal Exchange. Trading in nickel was halted after an unprecedented 250% price spike. That left brokers struggling to pay margin calls against unprofitable short positions. Russia is threatening to cut off natural gas supplies to Europe. That's part of Moscow's response to sanctions imposed over the invasion of Ukraine. It's a move that could heighten the turmoil in the energy markets and drive consumer prices even higher. Meanwhile, Bloomberg reports the EU is considering joint bond sales to finance energy and defense spending. And in the U.S., in Congress, key lawmakers have announced the outline of a bipartisan bill to bar imports of Russian oil into the United States. The House could vote on the proposal as soon as Wednesday. Russian oil makes up about 3% of U.S. crude imports. I'm Anna Edwards in London with Matt Miller and Kayleigh Lines in New York. And Matt, what with the moves at the London Metals Exchange, the moves on nickel and the EU debt-raising plan, there's plenty to talk about here in Europe. What's on your mind stateside?
Well, I mean, as you know, I've lived in Germany for the past 6 years. So for me, I mean, the European bond news is just amazing. Part of a huge sea change that's happening over there. And I don't think we can talk enough about it. LME probably thinks we talk a little bit too much about the price spike in nickel. I don't think they want a day like that to ever happen again. Here in the U.S., you're not seeing a lot of fallout from those two monumental European stories. We're basically seeing a little bit of a dead cat bounce, if you will, from the drop that we had yesterday. 3% in cash on the S&P 500, and now futures are up about 0.25%. Investors are letting go of some 10-year debt. That lets the yield float up about 6 basis points to 183, 184. NYMEX crude continues to gain. I think this, for Americans, this is front and center still. The oil story is just unbelievable. 122.31 for Texas Intermediate. And then Bitcoin, which is kind of, I mean, it is rising 2.5%, as you can see, 38,846. But it's really been crypto to some extent left out of the big moves, the big swings that we've seen in commodities of late. Although, Kayleigh, it is a commodity in a sense itself.
Commodity currency, I think we're still trying to define that asset class, Matt. I do want to point to some breaking news we are getting out of Shell, which has just announced its intent to withdraw from Russian oil and gas. It will stop all spot purchases of Russian crude oil, shut service stations and aviation fuels in Russia. Again, Shell, the latest big energy player to pull out of the Russian market. That stock is down about 0.9% in the London session. Now, as for some stocks on the move here in the pre-market session in the U.S., while you are seeing a lot of commodities moving higher, aluminum actually is starting to head in the other direction, and that is weighing on Alcoa, a big producer of that commodity. It is down about 4% in early hours. But of course, while we're talking about energy, the likes of Shell, oil, gas moving higher, that is aiding some of the players here in the U.S., including ConocoPhillips. It's up 1.2%. And interestingly, travel stocks have been among the big laggards in recent days because you have concerns about the war's disruption on travel broadly, plus higher fuel costs, what that could mean for profit. But you're seeing a little bit of relief coming into that space today. You have Delta Airlines up the better part of 3%, Norwegian Cruise Lines by a little more than 1 percentage point, Anna.
Yeah, one of our colleagues, John Author's writing a really interesting piece about how it's some of the same sectors of the economy in focus with war in Europe as it was with the pandemic. A big picture story to talk about. Let's get back to what's happening here in Europe then, Kayleigh, and we see the European equity markets. They are bouncing. They bounced off earlier lows on the back of that news that we are going to see European debt raising, or they're talking about European debt raising on a pan-EU basis to try and take on some of the investment needs around energy and also defence. The Italian 10-year yield then coming down as a result of that. So the spreads between the Italian debt and the German debt, that spread coming down as a result of more talk about burden sharing, essentially, on the fiscal side. And we're seeing a little bit of respite from the higher energy prices in terms of the European gas story. This is the European benchmark, down by 7%, but that doesn't take away from the fact that we've seen a stunning rally in these gas prices in recent sessions, of course. And here's the nickel price. 80,000 is where it was halted on the LME a little bit earlier on this morning. That's after it shut after a 90% rally yesterday, up at 55,000, and then jumped up to 80,000 overnight. And the LME forced to take some action after that 66% jump earlier on in session. A short squeeze going on there, and we wait to see when trading will reopen, Kayleigh.
We eagerly await it, Anna. And of course, that move we're seeing in nickel and really commodities across the board, all feeding into concerns about inflation. But really, that is morphing into concern about stagflation and potentially more recessions as fuel, food, metals prices surge after Russia's invasion of Ukraine. Sylvia Dell'Angelo, Federated Hermes senior economist, is joining us now. Sylvia, you now have the European Union considering huge bond sales in order to raise some more funding here. How much can fiscal policy offset the inflationary and potentially deteriorating growth forces at play due to the war in Ukraine?
First of all, it's hardly surprising that Europe is responding by using the fiscal lever in this situation, as clearly Europe is one of the regions that have more to lose from the implication of the crisis in Ukraine, from the war in Ukraine. And in particular, well, Europe is heavily reliant on Russian energy, and it's like a net importer of energy, so it's particularly sensitive to high energy prices. As a rule of thumb, a 10% increase in oil prices tend to shave 0.2 to 0.3% of GDP in the Eurozone. So given that oil prices have increased by 50% or more since early this year, the impact on GDP growth in the Eurozone is going to be massive. So I think it's really hard to really offset that big impact. Nonetheless, I mean, that's a very significant move, and it will provide some relief.
Sylvia, we wait for more details, of course, on that joint debt raising. But what are your expectations then around fiscal stimulus and fiscal impulse in Europe, and how much it can protect the European economy, maybe from recession, especially at a time when maybe other parts of the world are maybe not spending quite so much on the fiscal side? Or has all that been rewritten since the war started?
So I would highlight, first of all, that for all the enthusiasm about more fiscal integration and burden sharing, at the moment, the European Union is really using these joint bond sales as an emergency tool. So in an environment of extreme events, such as pandemics, wars, and so on. So I think we're still quite some way off, let's say, integration, even though this is like an important step in that direction. So I would expect also some fiscal easing at the national level, as clearly governments probably want to shield the most vulnerable consumers from the heat from like higher energy prices. So I don't think that we'll only see EU level fiscal easing. We'll probably see also some national level fiscal easing this year. Overall, I expect a moderately expansionary fiscal stance for this year. But of course, the recessionary risks are still pretty much on in Europe, in the Eurozone, given, again, its reliance on Russian energy and its sensitivity to energy prices. It will depend, Sylvia, of course, on what happens with this war.
Yes, absolutely. And our thinking and our thoughts are very much on that subject. Of course, what we've seen today on this debt story, Sylvia, has brought down spreads in terms of sovereign debt. Does the ECB or do European authorities need to do anything to tackle spreads in other areas? I was looking at credit spreads increasing around Europe. Is that something that the ECB needs to take action on?
Well, the ECB is clearly in a very awkward position right now, very difficult position, as clearly this war has resulted in a further deterioration of the growth inflation trade-off that had already deteriorated because of the pandemic. So I think that the ECB will basically put on hold its normalization plans right now. Recent data suggests that the inflationary concerns have become more prominent as basically inflation has hit new record highs. The labor market has continued to tighten with the unemployment rate hitting new record lows. But of course, I think that the ECB will have to shift its attention to growth risks stemming from the conflict in Ukraine. And so I think at this stage, it will put its normalization plans on hold and basically wait and see, analyzing all the developments.
What happens to inflation at that point, Sylvia? I mean, then you have, especially if the Germans, I mean, yesterday the EU said that they were going to reduce Europe's dependence on oil by 80% over the next year, a feat which seems impossible to me for Europe's largest economy since Germany is so dependent on Russian gas. I mean, how do they deal with inflation? Does it get to U.S. levels, 7%, 8% year over year?
Again, as a rule of thumb, a 10% increase in oil prices result in a 0.2 percentage point addition to inflation. So oil prices have increased by 50%, and so inflation in the Eurozone could end up 1 percentage point higher than the current path. And so, I mean, we might
gas
see...
has been an even bigger problem than oil, especially for the Germans.
Of course, I mean,
what's your rule of thumb for the gains in gas?
This is a conservative estimate because, I mean, we're going to see also higher gas prices, but also higher food prices because, as already pointed out, Ukraine and Russia are important producers of wheat and grains more generally. So we might end up with potentially a double-digit inflation in the short term in the Eurozone as a result of this crisis. That said, it's mainly cost-push inflation, driven by a supply shock that the ECB can do little about. So I think that the ECB will continue to monitor inflation expectations and developments in wage inflation in order to see whether there are second-round effects. And only if there are second-round effects or signs of second-round effects, it will turn more hawkish. But as it stands right now, I think that growth will be the main concern.
Silvia, thank you very much. Thanks for joining us. Silvia Dell'Angelo of Federated Hermes. Let's just recap some of the lines Kaylee was breaking earlier from Shell. Shell saying it will stop all spot purchases of Russian crude. It's Shell's intention to withdraw from its involvement in all Russian hydrocarbons, including crude oil, petroleum products, gas and LNG, in a phased manner. And this is interesting, aligned with new government guidance. And of course, earlier on this week, it took a barrage of criticism. Shell took a lot of criticism for buying a cargo of Russian oil. Clearly, there was some clarification of the government position then, I assume in the UK, on the back of that. Coming up on this programme, more on the war in Ukraine with Georgina Wright, Senior Fellow at Institut Montagna. She'll be with us next. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. You're looking live at the Principal Room. Coming up later today, Pfizer Chairman and CEO Dr. Albert Bourla. That's at 12 p.m. in New York, 5 p.m. in London. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kaylee Lines in New York. Let's get more on the war in Ukraine. We're joined now by Georgina Wright, Institut Montagna Senior Fellow and Director for the Europe Programme. Georgina, good to speak to you today. We're seeing a lot of unity around Europe in the face of war. Do you expect that to hold? Do you expect the European Union to remain pretty united, impressively so perhaps, in the face of these external challenges?
Yeah, thanks for having me on. It's an excellent question. I mean, we could talk about European solidarity, but clearly there's transatlantic solidarity as well. I mean, there's sort of daily contact between the White House and the European Commission and the White House and EU capitals has been absolutely outstanding. And you've seen, obviously huge measures and, restrictive measures and sanctions being adopted. I think Europeans have wanted to demonstrate first and foremost support to Ukraine, be that politically, of course, financially, militarily, through equipment, and they're also contemplating now extra measures that they could take. I think there's a huge push from publics as well, who are really condemning what Russia is doing. And I suspect it will continue to hold. But now, the question is, what additional measures could Europeans take? And of course, if they do start talking about, banning the imports of Russian crude oil, it's going to hit some European countries much more than others. So there will be a need there to think about solidarity in terms of how we can respond to those countries and how we can assist them as well.
What is Europe and, all of Europe and the West, I'll say, although I know that includes some Eastern European countries, what is the West offering Russia in terms of an off-ramp for this?
Yeah, well, at the moment, they've said, if you want to come to the negotiating table, you should talk to Ukraine and we can help facilitate that. Clearly, there's been an indication that there's no willingness to do so. President Macron, the French president, continuing to talk to Vladimir Putin. And some of the kind of readouts of those calls have been very pessimistic. The worst is yet to come, and there is no attempt to stop what is going on. So I think now, really, the pivot has been, what more measures can we take? So we noticed that these sanctions don't deter Russia, but they will punish Russia. At least that's what Europeans are trying to do. And so the question is, what do they do next? And if they do end up banning, imports of crude oil, how do they help those countries that are going to be most affected? And as you said, this is a Western response, and you're seeing close talks between the United States, Europe, but also Japan and other countries as well.
How much has this redrawn European security lines, Georgina? I mean, how much of this is, irreversible, historic change?
Well, it does seem to have sort of a domino effect. I mean, 2 weeks ago, when we were talking about European defence, most people in policy circles were like, oh, that, perennial problem, nothing's really going to happen. And now you've seen Germany wake up and commit to spending huge amounts on defence, and even willing to kind of, take on debt to be able to finance defence measures. You're seeing Denmark question whether or not it should opt back into European security measures, because at the moment Denmark has chosen not to take part of any European defence initiatives. You're having even countries like Ireland, questioning what is our role, how can we be more, active and able to respond. I think there is a real wake-up call in Europe that at the moment Europe on its own, so i.e. without the Americans, cannot actually respond to a war that's going on their continent. And then there is a question about how you are able to respond militarily, but also how you continue to work together and maintain the sense of solidarity.
Well, Georgina, we understand that 2 European leaders, Olaf Scholz of Germany and Emmanuel Macron of France, are currently discussing the situation in Ukraine with China's President Xi Jinping. And we understand, according to CCTV, that Xi says China is willing to coordinate with Europe on Ukraine. Unclear exactly what that means. But does it really matter what Europe is doing so long China isn't out condemning Russia, isn't taking part in the sanctions? As long as China provides the backstop, does anything that the West does really ultimately matter?
I mean, what China does matter, for sure. And I think that's why, you're seeing the United States put on pressure, but also Europeans as well. I mean, China, for starters, is the greatest exporter of the greatest importer of Russian crude oil. So, of course, even if Europeans and Americans decide to ban imports of Russian crude oil, it also depends on what China does. So I think there is a sense there that you need to continue talking. I mean, China has taken a policy where, it doesn't want to sort of intervene or have a sort of active intervention, but it will, has sort of indicated that it will, be part of those UN security talks, etc. So it's very difficult to know what's going to happen, but obviously everything could change over the next couple of days.
Georgina, thanks for your thoughts. Georgina Wright, Institute Montaigne, Senior Fellow and Director for the Europe Programme. Coming up on Balance of Power, former US Ambassador to NATO, Kay Bailey Hutchison. That is at 12:30 p.m. in New York, 5:30 p.m. in London. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller with Kayleigh Lines in New York and Anna Edwards in London. Tom Keene, co-anchor of Bloomberg Surveillance, joins us now to talk about what's ahead on the program. And Tom, I think it's interesting, the juxtaposition. On the one hand, you've seen a coming together of the West, and I'm using quotes because I know that there are Eastern European countries in this alliance. On the other hand, you've seen a separation. We had a news item out this morning, European joint bond issuance, so huge that it moved European markets, and it's really an historic turning point. On the other hand, it has had no effect on the U.S.
Yeah, it's very interesting to see that, and what that comes down to is the rangeness and the flightiness of the tape right now. I noticed that, Matt, that you saw the bond headline come out, and there was an ample recovery along there. I look at Euro Swissy mostly as sort of the thermometer, if you will, of Europe. There's other things you can look at as well, but there's definitely was a recovery, and we'll see now if that gives way. If I look at Euro Swissy right now, I've got it about where it was. So we've given way from that, and we're really completely dependent on news flow on the commodity space and on obviously European gas and the huge, huge shock of what we're seeing off Netherlands.
Yeah, I mean, and in the spirit of never letting a crisis go to waste, Tom, and certainly, a war is such a crisis in Europe. Huge joint bond sale is the wording that comes across the Bloomberg terminal on that particular story that Matt was referencing. Fiscal burden sharing really being brought into reality by first a pandemic and then by war on the continent. Well,
we're seeing it, and it was predicted by David Folkers-Landau, who's a real student of not only of European economics, but the political economics that goes with it. And Folkers-Landau was heated, I'm going to say 7 days ago, in that we will see a fiscal stimulus in Europe that we've never imagined. And, you know, I'm not willing to say it comes off the 50s and the 60s after Konrad Adenauer, but I will say that we've seen a fiscal stimulus beginning with this bond announcement.
And finally, Tom, of course, fiscal stimulus, the previous argument was that had led to inflation. Now we're worried about commodities leading to inflation. What charts are you watching on that front?
I think nickel is the front story here and what the London Metals Exchange is going to do with it, but there's many others as well. I actually looked, Kaylee, this morning at the actual electric bills across all of Europe, and I found it just absolutely extraordinary to see the percent change we're going to see in Italy, in Spain, maybe with Spain leading the way. It's something, Kaylee, Americans have no understanding of.
Well, Americans are paying record prices at the pump, but right, everything is relative, Tom. Thank you so much for joining us, Tom Keene, co-anchor of Bloomberg Surveillance. Looking forward to the coverage coming up. And of course, in the meantime, Matt, we continue to watch these markets, not just the commodities complex. You're also seeing a lot of selling pressure in the global bond markets, and that all comes back to inflation fears.
Yeah, absolutely. I mean, we see it in the belly of the curve here in the U.S. You were showing the New Zealand 2-year, but even 10-year treasuries are up 5 or 6 basis points. I think that, you know, the nickel story caught us by surprise overnight and is so interesting, but it's really an anomaly, Anna, isn't it? I mean, this is really a story of the London Metals Exchange was poorly prepared for a short squeeze.
Well, we'll certainly have to wait for the fallout of that one. We don't have any nickel trading yet. It's not back yet, and maybe there's an expectation it doesn't come back for a little while. We'll see what, no doubt there will be some sort of investigation and some sort of review as to what went on here. So much of a short squeeze that they had to cease trading in nickel. This is Bloomberg.